Hey everyone, welcome back to Corporate Decoder, the place where we decode the very heart of corporate America. And sometimes, well, let's just say things get a little bit more interesting when we're talking about digital assets. Today, we're diving into a filing for the Grayscale Ethereum staking mini ETF, and buckle up. Because this one details a pretty significant shift in how this ETF functions, moving towards a more flexible creation and redemption process. If you appreciate getting straight insights from corporate documents like this, make sure you are subscribed. We also have a Discord community linked in the description below, where we break down these kinds of filings even further. So what we've got here is a current report, an 8K filing, which essentially means something important has happened that the company needs to tell investors about right away. For the Grayscale Ethereum staking mini ETF, the big news revolves around a regulatory approval that allows for in-kind creations and redemptions. Think of it this way, normally when you want to create new shares of an ETF or get your money back by redeeming shares, you are dealing with cash. You get shares, or you give shares, you get cash, you get cash. But with this new approval, authorized participants, who are basically the big players that create and redeem ETF shares in large amounts, can now use the actual underlying assets, in this case Ethereum, to create or redeem shares. This can be a more efficient way to manage the ETF. This is a pretty big deal because it means the ETF can now operate with more flexibility. It not only impacts how the ETF itself is managed, but also potentially how the underlying Ethereum is handled. It is like moving from a system where you have to sell your gold to buy a car, to one where you can directly trade gold for a car. This is effective as of the 2nd of February 2026. The filing also mentions that Grayscale Investments Sponsors LLC, which is the sponsor of this ETF, has amended its participant agreements with entities like Jane Street Capital LLC and Virtue Americas LLC. These amendments allow these authorized participants to conduct these in-kind creations and redemptions, and it's not a closed door. The sponsor can bring on more authorized participants down the line who might handle creations and redemptions in cash, in kind, or a mix of both. Now, this particular ETF is incorporated in Delaware, which is a common spot for companies to set up shop due to its business-friendly laws. Its commission file number is 001-42184. The ETF itself trades on the NYSE Inc. under the symbol ETH. This is the ticker symbol everyone will be looking at if they want to trade this ETF. The filing also flags that Grayscale Ethereum staking mini ETF is an emerging growth company. This basically means they have some breathing room when it comes to complying with certain new or revised financial accounting standards. It is a status designed to help smaller, newer companies get off the ground without being immediately bogged down by the most stringent reporting requirements. This section is where they detail the new agreements they've entered into these amendments to their participant agreements, enabling the in-kind process. This isn't just a minor tweak, it is a significant operational change. Beyond the participant agreements, there are supplemental disclosures. These are updates to previously provided information, like the ETF's annual report, to reflect this new in-kind capability. They're essentially telling the world, hey, things are changing how this ETF works, and here are the updated details. There are also disclosures related to tax consequences. This is crucial because the way an ETF handles creation and redemption can have tax implications for investors. They're updating investors on how this new in-kind process might affect the tax situation, especially regarding something called the staking condition. While the details of that condition aren't fully elaborated here, the report confirms it has been satisfied and that these new developments are being factored into the tax guidance. This exhibit 99.1, would contain the nitty-gritty on how these creations and redemptions will actually work. Now, it supersedes the old descriptions, meaning the cash-based method is now just one option, and the in-kind method is available as an alternative. Exhibit 99.2 is the updated tax information. Investors in any ETF should pay close attention to tax details, and this filing ensures that the tax implications of the new in-kind operational structure are clearly communicated. And Exhibit 10.1 provides the actual template of these amended participant agreements. This is where you'd find the legal specifics of the arrangements with the authorized participants. So what is the big picture here? This is not about dramatic financial numbers in this particular filing, as it is more about operational and regulatory changes. However, this shift to in-kind creations and redemptions for the Grayscale Ethereum staking mini ETF is a strategic move. It likely aims to improve efficiency, potentially reduce costs for authorized participants, and may even lead to a tighter tracking of the ETF's net asset value to the price of Ethereum. When authorized participants can use the actual cryptocurrency, they can bypass some of the friction and costs associated with buying and selling on the open market. This could make the ETF more attractive to institutional investors who deal in large volumes. The key risk here, as always with crypto-related investments, is the volatility of Ethereum itself and any regulatory uncertainties that might still exist around digital assets and ETFs. However, the fact that they've received this SEC approval for in-kind transactions suggests a growing comfort and established framework for these types of products. In my opinion, this is a positive development for the Grayscale Ethereum staking mini ETF. It shows adaptability and a proactive approach to meeting market needs and regulatory advancements. It signals a maturing of the crypto ETF space, moving towards more sophisticated operational structures. The long-term implications will depend on how smoothly this in-kind process is integrated and adopted by market participants. And of course, the ongoing performance of Ethereum. Alright, that is our breakdown of the Grayscale Ethereum staking mini ETF's latest filing. What is your take on this shift to in-kind transactions and what it means for the future of crypto ETFs? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance and investing. Don't forget to check out the Discord community linked in the description for more exclusive content and discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.